Today, we're tackling a topic that many investors have probably asked themselves at some point. Should I go active or passive? Hello and welcome to another episode of Intelligent Investing's Market Talk series. I'm April Tan, COL's Chief Equity Strategist. Passive investing has gained popularity in recent years, with more Filipinos gaining access to low-cost index funds. But recently, active funds have started outperforming, particularly in the Philippine market. So which one makes more sense now? And how do you know which is right for you? To help us break this down in simple, practical terms, I'm joined by Zerge Zandueta, Portfolio Manager of COL Investment Management. We'll talk about the core differences between active and passive investing, when one may work better than the other, and how COL's own actively managed fund, the COL Strategic Growth Fund, has positioned itself to capture opportunities and manage risk, especially in today's fast-changing market. Whether you're already picking your own stocks or just starting to explore funds, this conversation is for you. Hey, thank you, Serge, for joining us in the show.
All right, sure. Hi, April.
Hi. Anyway, to start, let's talk about active and passive investing. So maybe you can differentiate between the two. I mean, in the most simplest term that anybody can understand.
All right, sige. So, passive investing, essentially, that's buying the whole market. So, the goal is really to just replicate the performance of the benchmark, whereas active management is trying to outperform the index.
I see. So, ganun lang kasimple.
Yeah. So, pag active, basically, you buy stocks and then the allocations are different so that at the end of the day, you try to beat the performance of the benchmark index. Whereas passive investing, you just try to follow what the index return will be.
Okay. So, what's the advantage of buying a passive fund? So, kasi, di ba, you said if you're buying a passive fund, you're just trying to replicate the index.
Right.
So, if the index, let's say first half is down 2.5, malamang you're also down 2.5.
That's
So why do people even want to buy a passive fund?
Yeah. So, I think the popularity of passive funds, like I'd say in recent years, over the past decade, the reason why it really gained so much traction is the simplicity or the simple nature of it. So, you buy index funds, you buy the whole market, and aside from that, it's also lower cost. So there was actually this, there was this very famous story of Warren Buffett making a bet with the hedge fund industry. I think it was back in 2007 or 2008. Na he said that by investing in low-cost funds, you could actually beat the performance of hedge funds over time. So what he did is, yung bet niya was like the Vanguard S&P 500 index. Yung bet nung hedge fund industry was parang like a basket of 5 hedge funds. Then over the course of 10 years, when they measured the performance, the Vanguard S&P 500 performed 100, I think somewhere around 135%. And then the hedge fund, the basket of hedge funds only performed 35%. So parang I think recently that's also the case that a lot of people have been making as to why passive investing works. And I think it does, but especially more so for developed markets like the US.
I see.
So for the Philippines, I think it gained popularity, to be honest, because like the period during 2010 to 2017, it's really the passive investing outperformed. But that was also because it was a period of time wherein a lot of foreign funds actually entered the Philippines. And when they enter, like let's say a small country like ours, basically gusto lang nila, they just want exposure in the market. So you just buy the whole basket of securities there, which is the index. That's why it went up.
Yeah. And also, I think index stocks at least are, I would say, more liquid.
Correct. That's right.
So that's why the foreign funds are buying them rather than the smaller names. Okay. So what about active funds? I mean, what then is the advantage of, active funds? Why should an investor consider investing in an active fund rather than a passive fund?
Correct. So at least with actively managed funds, you have the potential of actually outperforming the index instead of just getting the same return. So I think in the Philippines, given that it's an market that's a bit more inefficient, less developed, there's actually more scope for outperformance. Whereas in a more developed market like the States, outperforming the index funds are actually much more difficult.
I see. Mm-hmm. So in the Philippines, active funds have been outperforming passive funds recently. I mean, it's not just the CSG, but
That's right.
almost everybody. Why do you think it's happening right now?
So Philippines at the moment is a bit out of favor in terms of the global fund management industry. So there's not a lot of foreign flows that's entering. So if that's the case, the eyes that's on the local market right now are also mostly from locals. And when that's the case, they really try to pick out and select which stocks could do better rather than just thinking of buying the whole basket. So the unfortunate thing, like let's say with an index fund, is since they own the whole basket, they buy all of the winners, but they're also holding all of the laggards. In terms of like at least active management, they can focus on which narratives, which companies, which stories they think are doing best. And at least over the past few quarters, that's what's been happening. So there are several issues that are actually out of the index itself that's been doing really well. And this has actually been able to help the performance of a lot of these actively managed funds.
I see. So, I think for the viewers to understand it more, better, can you share some examples where an active fund manager spotted opportunities or avoided pitfalls that enabled, the index fund or the active fund to outperform these index funds?
So yeah, I'll give an example na lang out of the CSG. So both, I guess, in terms of the opportunity and the pitfall. So on the opportunity side, I remember towards I think second quarter of last year, we actually took a position in China Bank. And one of the reasons why we actually entered that opportunity is we saw the fundamentals were really good. And given the size of the market cap of the company, we saw that it actually had the possibility of being included in the index at some point in the future. Actually didn't happen right away. We needed to wait until I think it was January or February this year before it was actually added. But it got added. So in the case of actively managed funds wherein you tried to look for individual stocks that could outperform, we're able to buy that. It's not in the index. So the index itself did not actually benefit from the big spike that China Bank had. In fact, nayari pa in a sense yung index because it bought China Bank at the highs. So on the day of inclusion, it was up 14%. In the case of pitfalls, the best example I could give, at least in terms of what the CSG did, is with regards to the property industry. So we were already spotting some problems, at least with the sector last year. But if you're invested, like it's in the PSE index, traditionally the property names take up a big allocation, somewhere around 18 to 20% yearly. So what we did, at least in the CSG, we went underweight the property names, Ayala Land and SM Prime. But the index itself, it still had the big allocation in those two property giants. So when their share prices started falling, the index got dragged along with it. But at least an actively managed fund, if we see that, we could at least lower our allocation in names like those.
I see. So I'm just curious, like, for example, I'm sure a lot of our viewers are, stock pickers. No?
Yeah.
So that said, they are already active investors, right?
Yeah.
So should they still consider buying funds? Or would they have any advantage of buying funds instead of just doing their own stock picking?
I think definitely. So actually in this debate, whether you actually go active or passive, I think there's scope for you as an investor to actually have both in your portfolio. Doesn't necessarily mean you need to choose one over the other. And when we talk about actively managed funds, there are also a lot of different categories where they fit into. Like let's say, for instance, the CSG, I would say our focus really is more on value. And then we pick these value names when the momentum or the technicals is right. But like let's say if a lot of our viewers are more stock pickers, more momentum based, they might actually leave out opportunities that a fund like us, that the strategic focus is more towards value names. Adding us in their portfolios could be beneficial. There are some funds also that are, like I say, some passive funds which are dividend based, or like globally there are some funds that are income paying. So like these opportunities all actually could help contribute to, like let's say, an active stock picker's portfolio, I think.
Yeah. So I'm also thinking maybe even if, for example, if I were an active stock picker, I'd also benefit from having funds because sometimes I'd only have one or two ideas.
That's right. Yeah.
Yeah. So I also need that diversification. And I mean, what am I going to do the rest of the time? I'm not
Yeah.
invested in one or two ideas. Diba?
Yeah, that's right.
Yeah.
So the benefit then talaga of the CSG is that it's like having extra hands in the market. We're doing the trading for you. Whereas if you're an individual stock picker, you really need to watch it very closely.
So, you know, you've already been talking about the CSG or the COL Strategic Growth Fund. So that's the actively managed fund. And then the COL Equity Index Fund, of course, is the index fund, just a passively managed fund. Just curious, like what differentiates the CSG from other actively managed funds in the Philippines?
Yeah. So the main difference I would say about the CSG is we're trying to outperform the index over the long term, but through lower volatility. I would say that's probably our primary, that's actually really our primary goal. So a lot of actively managed funds, that's the goal. But oftentimes, parang the old adage rings true that the higher the return, the higher the risk. So what you would probably tend to see is with a lot of actively managed funds, yes, they can outperform, but you when you check the volatility, like let's say of these funds, they also tend to move even more than the index. So at least what I like about our fund is we strive to be all weather, meaning we want to make it a point wherein investors are less scared of, like I say, very big drawdowns in terms of the CSG fund, in terms of the way that we manage it. So we're actually able to achieve that goal of providing stock market like returns, but with lower volatility through active management. So what we've seen kasi with the Philippines over the past several years, unlike let's say the US that's moved from the bottom left corner to the top right corner, the Philippine market is down, up, down, up, down, up. Eh. So it would have been actually beneficial if you were able to capture the turns. Like if it's high, you're able to sell. If it's lower, you're able to buy there. So unfortunately, like I say, with a lot of I mean, even actively managed funds, I try to monitor. A lot of them, they would tend to still be heavily allocated in equities, even when the market is already falling. But like I say, the Philippine market, which tends to be a bit more cyclical, it would really be more beneficial na magtabi eh. So I think I would say the skill of our team, the investment committee, we pay a lot of attention also to technical analysis. So we're able to actually sidestep and identify when, I mean, key turning points are in the market are about to unfold, and we do proper risk management when we see that about to take
I
place.
see. And I'm just curious about the fund's idea or the fund's thought about having cash.
Yeah.
Like I know some actively managed funds, you know, limit their cash positions. Like what about CSG? Does it allocate? I mean, how flexible is the allocation to cash?
So that's the beauty actually of the CSG is we welcome cash when the situation calls for it. So a lot of funds maybe they're afraid to go in cash because the idea is when you're in cash you're not generating return for the investors. But the beauty of the CSG actually is we're flexible in terms of our allocation. So like let's say when we go on cash, we see opportunity in fixed income, we can actually park there to reap the benefits of interest income in the short term. And then, of course, when you're in cash also, you're able to sidestep out of the decline in the market. So for the CSG, in terms of our mandate, we're actually allowed to go up to 100%
Oh, wow.
cash. If we're able to, like I say, hopefully when that time comes, we're really able to spot it. But
not yet.
yeah,
We're so cheap. I don't think you'll
that's
go
right. That's right.
100%
Hindi naman
cash.
siguro.
Yeah. But just in case, let's say you're in a very like hot market, it looks like there's a bubble.
That's right.
That,
Yeah,
or a stock has gone up a lot, then, you have to sell.
correct. Yeah. So if our conviction calls for it, then at least we can.
I see. And you use both fundamental and technical analysis?
That's true. So we use fundamental analysis really to vet the names that we want to enter, and technical analysis we use it for timing.
I see. And can you buy non-index non-index stocks?
Yes, we can buy non-index stocks, and I would say that's actually a source of an edge for our fund. So yeah, especially like I say today's market, a lot as you mentioned, a lot of names are really trading at extremely cheap valuations with very high dividend yields. I mean, a good number of these are non-index names actually. So yeah, we do where we can and we participate in non-index names.
Okay. So this one, like I'm just curious if you consider global macro developments when investing in local stocks.
Yes, we do, and actually, most of the time, we actually plays a big role in terms of how we determine when to buy, especially. So, I asked earlier about fundamentals and technical analysis. Uh, like it's a Our chairman has always taught the framework to us. That's the FTSR framework, fundamentals, technical sentiment, and risk framework. So the most important of that actually is risk, but another important element is sentiment. So what happens globally has a big impact in terms of sentiment in general because at least Philippines, half of our market is still foreign. So if like let's say the US is very down, and they're sad about their investments there, sometimes the Philippines is just it's a small market. Pero benta ka na lang din dyan kasi
Yeah, yeah.
alanganin eh. So yeah, it really, and I think if you look at the long-term correlation, so I checked it also this morning. Um, the 5-year weekly correlation of the Philippines and the US is still pretty high. So about zero point 0.7. So it's dropped na, especially since Donald Trump won the elections, but it's still pretty high.
Yeah, yeah. And yeah, I mean, like personally, like I looked at, the most important turning points, which is, what if the US goes down? I mean, we've always been vulnerable to contagion risk,
Correct, that's right.
unfortunately.
Yeah.
I mean, we've never decoupled.
Yeah.
So yeah, in a way, it's important in that respect.
Yep.
So anyway, earlier on you talked about CSG's outperformance. So maybe you can share with us, like so far. I mean, how many years since its launch, and how has it performed?
Yeah.
So far.
So the CSG was launched in October 2023. So right now, it started with the net asset value per unit of 1 peso. So as of last Friday, it was 1.0927. So about the 9.27% return since inception. Compared to the index, so the index is up about 2.4%
During that
during
period.
that same time frame. So at least we were able to derive some outperformance. So a lot of it is from timing, from stock selection, then from dividend income also actually from the issues that we select.
Yeah, and also the risk management you talked about, being in cash
That's right.
when stocks are maybe expensive or uncertain, and taking into consideration what's going on overseas.
Yeah.
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 So for my final question is, of course, I mean, like at this point in time, at least, do you think active investing or, will still outperform the market right now?
Me personally, I think yes. And I would actually attribute probably the biggest reason as to that being the case as interest rates. So interest rates right now are still high. So people expect maybe the Fed, BSP to cut more. But in general, the level is still pretty high, like say relative to the past 10 years. And I think if that's the case, fund managers, big global fund investors, they're not necessarily going to be in a rush to go right away into equities. So like let's say the whole basket going up in unison just because of that dynamic for me appears unlikely. And aside from that, if we look at how, like I say, the Philippine corporates have been performing since first quarter, even earlier parts in the second quarter, there's a lot of dispersion in terms of performance. So you could really pick out still like who are gonna be the winners and losers.
Yeah, I guess there's still different themes, like the
Sure.
recovery is not yet broad-based.
Correct. Yes.
And yeah, the foreign investors aren't yet coming in a big way.
That's right.
So that said, there are pockets of opportunities rather than macro.
Yeah, that's right.
Okay, so with that, thank you very much, Zerge, for sharing with us the difference between active and passive investing.
Thank you also, April. It's a pleasure.
That wraps up our conversation with Zerge Zandueta of COL Investment Management. I hope today's discussion helped clarify the difference between active and passive investing. If you're thinking about investing in funds or rebalancing your own portfolio, make sure to weigh your goals, your risk appetite, and your time commitment. Now we'd love to hear from you. Do you prefer active or passive investing? And why? Let us know in the comments. And as always, if you found this episode helpful, don't forget to like this video, subscribe to the channel, and share it with a fellow investor. Until next time, I'm April Tan, and remember to stay sharp, stay selective, and as always, invest intelligently.